All right, so welcome to another video. Today we're going to go ahead and take a look at Target. And Target's popping a little bit after earnings here. I'm going to give you some takes. Keep in mind, none of these are recommendations to buy, sell, or trade stocks, just my own personal opinion and idea. And if you want to grab some of those ideas, feel free to join me on the Discord channel. You can see that in the link in the description below. And there we post some stock movers and some other great things. And then we also go ahead and you can check out on the Traders Fly website. There's a ton of great freebies here as well, where if you go to the freebies, you can go in and grab a bunch of freebies, as well as check out some of the classes here that we have and offerings. Anyways, let's get started with Target here. If we go in and go to TGT, you can see Target's shares surge as retailer says it can keep the growth beyond the pandemic. So basically the earnings came out here recently. So if you go ahead and just take a look at the earnings, there's some positive things there. It is also starting to pay for some jobs, $24 an hour. So people are liking some of these things. If you look into here, the market is in a sea of red right now. But if you go in and go to Target, you can see the earnings right here. What we had, we basically got 3.19 versus the estimate is 2.855. So that's pretty good. Whereas right now the S&P 500, we are down basically 65 points. Oh no. So yeah, that's not good. Right. So we're maybe trying to hold this 4,300 right here. But we'll see if that'll hold off. Anyway, as we go in and take a look here at Target, you can see this one right here is holding out. The descending trend line right here has been broken. So there's our resistance level. So this channel has been going on a downward path for a little while, probably about since November. But now we're starting to find a little bit of a bottom around 190. And, you know, looking at this could be a nice starting break to that. And that's where you can go ahead and say, hey, this could be a little bit of a nibbling opportunity at this point. But that's just depends on which outlook you're looking for. Is it a short term, long term? If it's for the short term, I would actually be a little more careful right here because you have quite a bit of a gap. And with that, you have kind of a gap in fade that happens. So sometimes they gap up and then they sell off down back to those lower levels because you've got 200 right here, which means there's a lot of empty space here. So it could go ahead and fill that gap. So be a little bit more careful in this area right now for the time being. But if you're just kind of looking at the technicals and you're looking at kind of, hey, well, what about these lows and what are we doing here? And can we actually kind of sustain these? I'd say looking at it, you know, it's a good bounce to have within a stock. The other thing to look at is you've got an A to B, B to C, C to D pattern. So when a stock completes an A, B, C, D pattern, usually it starts something new. And you're starting to see some of that volume come in right there as well. So you're either going to get some sideways action or a pop. And right now we got a pop. So I'd say the biggest concern right now is just more or less watch out for a possible pullback right here at this upper level where we could pull back to retest some of these lows simply because of that gap, because there's some empty spots. So you could use kind of the lows of today, whatever they're going to be, or a little below that, maybe a swing point over here that you could use as maybe about a 215 just to give it some range. And use that as maybe of a stopping point if you're more active. As a long-term investor, you're still getting this stock from the highs, you know, kind of to about the 220. You're still down about 17% or so if you really kind of do a little calculation. Let's just double check here. Yeah, about 17% down. So you could say it's a buy the dip opportunity, even though we're popping here at 220 versus a $200 price point. But, you know, you're also holding kind of this weekly moving line. You're holding right around 200. 200 is also a psychological level right there. So there's a few positive notes going in for the stock. You can see that a lot of times when it hits those red levels, it'll kind of bounce, and that's what's happening right now. There are a few times where it does break below it, kind of in 2018, 2019, it broke below it. But overall, on the weekly time frame, it's been usually a good buying opportunity at that time. So anyway, do I think that it's time to party and go out and run out and buy the stock immediately? No, but what you could do is spread and allocate your capital just in case it keeps going down. Kind of look to break your position up into 10. So if you're trying to get 100 shares, break it up into 10. So that means you'll go in 10 times. And that also means, you know, if you go in over the next 3 months, just break it apart, you know, every 2 weeks. you could buy a little bit, or every 3 weeks, or every 10 weeks. You know, you kind of budget for yourself. Like, what do you want to do with this? Short-term investor, long-term investor, that's a personal decision. So make the call, see what happens, and budget accordingly. So anyways, I hope that helps, gives you some insight on just overall what's going on here, and some of the technical levels with it. I do think a little bit of the flash crash, you could say, in this stock here around that 180 level could become some support level, but time will tell. So we will see, and you know, watch some of those levels, and those would be opportunities. I'd also be careful if the stock does start to run up very quickly. This double top right up there, that's kind of another level. About 266, 270 is kind of another level of resistance. But you don't have to worry about that anytime soon. Right now, there's just a lot of turmoil in the market space. As you can see, there's just a lot of problems right now. So I think once the market starts grinding back up into kind of a movement like this, where we start kind of moving up, then you can maybe watch out for the problems in Target at the upper ends. But for now, it's just more about protecting kind of this gap up. Like, you got a gap up, so if it pulls back, what are you going to do? So make a plan for that, and that'll be a better suited. So anyways, thank you so much for joining me. Hope you enjoyed the video. Feel free to check out the Discord channel, sign up there, or grab the freebies on the Traders Fly website, where you can get some great templates and free videos and trainings as well. Thanks again, and I'll see you next time.